Hello, today we are going to solve the problem of Jan 2024 question number 2. The bookkeeper of Naag provided the following list of balances at 31st December 2023. Naag is aware that there are errors in the books of accounts that could affect the balancing of the trial balance. So these are the book of account balances which is given. Okay, so we are supposed to prepare trial balance at the end of December 31st, 2023. So let's prepare that. So as you know, trial balance is just about the understanding, okay, and putting the balances in the debit or the credit. You should be remembering the concept of debt click, okay, says DR, okay, expenses, assets, and uh, drawings, okay, and drawings. So all this will is considered as debit balance, okay. And the next you have the click concept, okay, which you have to understand. So what are the clicks? CR are liabilities, okay, liabilities and income and capital, okay. So these are credit balances which are which occur, and we know under what comes under each income and expenses and under liabilities and assets. So first one is a revenue. Revenue is a credit balance, okay, so let's put that, okay. Why is revenue a credit balance? It comes under the income in the income statement. So 156720, and then you have the purchases. Okay, purchases is a debit balance. So let's put that there. Okay. So why is purchases? Purchases comes under the, okay, purchases comes you know where the purchases comes in the purchase in the income. Purchases, it is like opening inventory plus purchases minus closing inventory. So it is related to cost of sales, which we are subtracting from the revenue. So it is opposite side of the credit. Then we have the opening inventory, okay, opening inventory. So that is also equal to, it is also a debit balance, remember, okay. In the income statement we put it as opening inventory plus purchases minus closing inventory, right? So next, discount allowed. So what was the discount allowed? Okay, when the cash payments were made. So the discount allowed is also a debit balance. Okay, the discount allowed is a debit balance, and discount received is a credit balance. Okay, discount allowed because I gave them, it's like the money going out of the business. So discount received, okay, it's like money coming into the business also you can think of. So in and out also will sometimes it's easier to remember. Then general expenses, okay, general expenses, we know it is a debit balance. So let's general expenses, it's going to come under the debit balance. So let's put that. Then you have the rent payable, okay. So rent payable, what does it become? 18,500. It is like an expense, okay. So it is going to be equal to, okay, 18,500. And rent receivable is like an income, okay, coming into the business. So I can put it as a credit balance. Then you have non-current assets at cost, okay. This is going to be a current asset, so it is a credit balance. So let's put that. Then you have non-current assets provision for depreciation. It's an expense. Okay, non-current assets provision for depreciation. So where will you put this? It's the total accumulated provision. So let's put it under, it is a credit balance. So non-current assets at cost, it is a debit balance, and non-current assets provision for depreciation will be a credit balance. Asset is a debit balance. Okay, then we have the capital. Capital is a credit balance, so let's put that. Then you have drawings. Okay, drawings, it's a drawings is a debit balance. Let's put that. Then 5% bank loan repayable 2026. Okay, it's a big liability, non-current liability. So it is a credit balance. So 20,000. Okay. And next one is bank overdraft. Overdraft is a liability. So let's put that as a credit balance. Then trade payables. Okay, it's also a current liability. So let's put it under the credit balance. Then you have trade receivables. Okay, trade receivables of around 14,600. So let's put it um, under the debit balance. It's an asset, non-current asset. Then irrecoverable debts. Okay, 955. So it is like a irrecoverable debts. Okay, it is like an expense, so I'm going to put it under the debit balance. Then allowance for irrecoverable debt, the provisions you are going to make for irrecoverable debts. Okay, it is a credit balance. Okay, now let's add up all of this value. Okay, so the value is going to be equal to 156720 plus 420 plus 3900 plus 10,000 plus 40,000 plus 20,000 plus 4080 plus 7850 plus 800. So the value is 143,770. So let's write that. Okay, the total is going to be 143,770. Okay, now let's calculate the total on the debit side. 110,000 plus 9,600 plus 750 plus 32,450 plus 18,500 plus 40,000 plus 17,000 plus 14,600 plus 955. So it is equal to 243 243 855 855. One second. So let us, did I have this properly? So sorry, this is 4 3. Okay, sorry, I wrote it as 2143. It is 243770. Okay, so now we can see that there is a difference. Okay, let's calculate the difference between these two. So there is a difference of about 843855 minus 243770. So here it is less by an amount of 85. So I'm going to put it as a suspense. Okay, suspense 85, and then I'm going to make this as the total. This suspense would have arisen because if there would have been errors, okay, which are not identifiable by the trial balance. So let's end this.